Dismal data, unexpected negatives, and a decision to pull the plug on Italy's poverty relief scheme. These are just some of the impending circumstances that have placed a great deal of pressure on the Italian government in the past couple of days. Now, where does the story begin? Giorgia Meloni, Italy's Prime Minister, was exulting earlier this year when she discovered that forecasts from the IMF showed Italy's economy growing faster than that of Germany and France. She called it proof of the effectiveness of her right-wing coalition government's economic policies. All was right with the world, and her administration as far as she and many others were concerned. However, at the start of August, she got a rude shock after data showed Italy's post-coronavirus pandemic economic rebound losing far more steam than was expected. To be precise, the concerned data revealed that Italy's economy had shrunk by 0.3% in the second quarter of 2023, which is far worse than the zero growth forecast that most analysts had laid down. And to give this data some context, the whole of the Eurozone, on the other hand, had registered a 0.3 expansion in its economy during the same period. This obviously candid issue brought to light more of the challenges confronting Meloni's government, which had been waging a dramatic campaign on high consumer prices, striving to keep growth on track and put Italy's heavy debts on a more sustainable footing. However, it's apparent that things haven't gone to plan as much as they'd hoped, and now all of Italy's paying for it. Consultants like Francesco Gaglietti, founder of Rome-based political risk consultancy Policy Sonar, have come out to claim that the ongoing economic situation is a nasty surprise to everyone. To Francesco and many other consultants, the Italian government was likely too focused on inflation, which is why they probably didn't expect their economic growth to lose steam quite so quickly. However, it already has, and now the government's faced every day with the same question. What will be done to rescue the economic rebound Italians had hoped for? Besides the challenge of an economic downturn facing the government, Meloni's coalition unit is also facing an already growing political backlash as a result of its phasing out the controversial Citizens' Income Poverty Relief Scheme that the populist Five-Star Movement launched in 2019. Apparently, in phasing out the scheme, Rome decided to impose stricter eligibility criteria for it after employees complained about the program. According to these employers, the program had benefited too many households, and as a result, it continually discouraged Italians from taking up jobs and created artificial labour shortages in the labour market. And a good example of this happened just last year, when the program benefited an estimated 1.7 million households. Yikes. We could definitely understand where the employers might be coming from, and it's easy to side with them in this matter. When people already have their needs catered for by a relief scheme, they'll obviously settle for those benefits they get for free rather than work for it. So now it's up to the government to find a balanced way to cater to not only the needs of the labour market, but also the needs of those who were previous beneficiaries of the scheme. Because the situation is no longer moderate as one would have hoped, when about 160,000 people whom the government had considered able-bodied and potentially employable received text messages that their benefits from the programme were being cut, your guess is as good as ours as to how they responded. Well, it led to protests in Naples and elsewhere, and more. Anyway, back to the economic downturn facing the Italian government. A bunch of opposition parties to Meloni's coalition unit recently came out to talk about it. They've said that the recorded downturn is reflective of serious questions about Italy's economic direction. Ubaldo Pagano, a lawmaker from the opposition Democratic Party, said in a statement, for instance, that the economic crisis Italy's currently in is not really about economic downturns or bad luck, but the results of the blatant inability of the current government to manage economic processes and encourage investments. Whether that's true or not, we'll leave it to facts and what you guys say in the comments section. Moving on, Italy's finance ministry, on the other hand, has blamed the economic contraction on global factors beyond Rome's control, such as the repeated interest rate rises from the European Central Bank. These rises were fiercely criticised by various members of Meloni's government when they happened, and the ministry has also said that besides the interest rate rises, other factors like the decline in the international industrial cycle, and the impact of the prolonged phase of rising prices of the purchasing power on households, among other things, are issues that have led to the recorded economic downturn. Filippo Taddei, senior European economist at Goldman Sachs, mentioned that Italy's disappointing growth figures are part of a broader malaise affecting European manufacturing, especially in Germany, which has seen its economic growth stagnate in recent quarters, and Austria, whose export-oriented industry wrestles with weak global demand. Now, what exactly could any of this mean? Well, he went further to clarify that even though the figures are not only a downside surprise and below expectations, they also reveal the fact that European manufacturing is currently facing an extended level of weakness. Besides that, he also mentioned that the figures reflect conditions apparently specific to Italy, like the Meloni government's decision to put the brakes on its controversial Superbonus scheme. Well, what precisely was this scheme all about? The Superbonus scheme was a program that offered Italians a 110% tax credit to undertake energy efficiency enhancing home improvements. And as you would expect, this benefit caused a frenzied post-pandemic construction boom as people undertook costly home improvements at public expense. With time, however, Rome announced big changes to the scheme in February of this year, and that has led to Italian construction activity going down by 3.8% from first quarter levels in May. To analysts, the measure taken by the Meloni government to curb the Superbonus scheme was not only fiscally prudent, but the transition away from the scheme was also well received by market participants, even though it wasn't an easy change at first. On the other hand, Angelica Donati, president of the youth wing of Italy's National Builders Association, said that the Superbonus scheme revved up Italy's GDP growth, and now that it was stopped cold in its tracks, it's become impossible to see how that won't create negative consequences for Italy's economy. Pretty difficult to argue with this point given the recent figures the economy has recorded and the fact that at the same time, investments funded by Italy's €191.5 billion EU-funded COVID recovery scheme have progressed far more slowly than expected. All in all, analysts still expect Italy's economy to regain momentum, allowing the country to reach the Finance Ministry's 1% GDP growth target for 2023. According to them, construction may remain weak in the meantime due to the impact of the Superbonus phase-out, but there's still conviction that manufacturers' performances will pick up in due time. Speaking of such performances, there have still been no signs of improvement in the fortune of Italian manufacturers since the start of the third quarter of this year. S&P's global monthly survey of purchasing managers found output and new orders both fell at historically steep rates in July, and estimated production had fallen the most since the pandemic hit more than 3 years ago. These weaknesses in the manufacturing sector have been attributed to a slowing global demand, restrictive credit conditions, and the impact of tightening monetary policy in the country. Lorenzo Codogno, a former senior Italian Treasury official, said he expects households to spend more as inflation falls, and as the Next Generation EU programme moves forward, that would support growth too. Now, if you're thinking the recession is likely in Italy's economic future because of the current downturn, you'd be wrong. Clearly, the economy is weakening because of the tightening of monetary conditions by the ECB, but not to the point to justify a recession. There is still so much stimulus in the pipeline, so it's not a matter of if Italy can bounce back from this situation, but when. Alright now, that's all we've got on the matter, and that's all for today's video. If you enjoyed it, please leave a like and subscribe to the channel. Also, share with your peeps, press that post notification bell so you don't miss out on future videos. Until next time, always watch out for trending news in the global economy space, and take care.